What a trade. That has been the motion of the week. What a trade after what a trade. Obviously, didn't put anything out on Tuesday because I didn't trade. Monday, we won a trade. And then last night, I caught this motherfucker. Look at it, mate. It's pretty freaking good. And in terms of my strategy, the changes I've made in terms of my strategy and in terms of scaling in, which is something that I'm trying out as well, it all came together in this trade. It all came together on Monday, and I'm super gassed. Still not a big win, man. As stoked as I am, like I can come on here and be happy that I took a good trade, I still haven't caught more than a TP1 in so long. Like it has been a really, really long time since I've caught a TP1 and 2 or a TP1, 2 and 3. Up this week, I'm up about 350 on my funded account. Had I been just taking one and dones, like say I took TP1 just at these equal highs, I would be up about $750 compared to the $350 I am right now from the 2 trades I've taken. But it just is what it is, man. These market conditions are tricky and still something I'm adjusting to because I'm usually dragging my nuts for a TP1, 2 and 3 in the charts. But mate, I have nothing to complain about. This day was obviously CPI, so a lot of people weren't trading. I came into the charts, and let's run through bias really quickly because this is one thing that was really, like my bias was in the opposite direction to my trade coming into market open. So obviously I'm looking at this and say we have no drawings on the table, you can't see anything. Realistically, to the upside, we have data highs. That's obviously a very clear draw on liquidity for me. But if we come over here, there's nothing, literally nothing for us to target bullish. We're sitting at the top of this range. And when I scale down and I see equal lows here on the 15 minutes, so significant equal lows, we have another draw on liquidity here, another draw on liquidity here, and then we also have draws on liquidity, draw on liquidity, draw on liquidity, all to the downside. So we have low resistance liquidity all the way to our downside. We also have taken this high on CPI, and I think NQ looked a bit better in terms of sweeping liquidity. Yeah, NQ looked a little bit better in terms of a liquidity sweep on CPI open. So why did I take along when I knew that we had such good draws on liquidity to the downside? And realistically, that just came down to me looking at 15-minute order flow. I saw us open up, I saw us rip down, and I did see us fail to inverse this gap. For me to even consider taking a short today, I needed to see some sort of 15-minute confirmation, or for me to take a long, I need to see some sort of 15-minute confirmation in the opposite direction. For me, the confirmation was this rejection candle off of this fair value gap for one. Also equilibrium here, like we come into equilibrium perfectly, and then we've rejected it. And it just looked like this is a clear rejection candle on that 15-minute time frame. So from here, I am happy to look for a long. So I'm scaling down onto lower time frames. NQ is showing the exact same thing. We have draws on liquidity to the downside, but we need to keep in mind that we're respecting this fair value gap. We have data highs as a draw on liquidity. And I was really just reacting to what that 15-minute time frame was telling me this morning. So I ended up taking this trade on ES over NQ. That's stuck for some reason. There you go. But I took the trade over here on ES just because we'd rejected a bit further. I wanted to take it on the leading index because like I just enjoy taking it on the leading index. I like to be a bit safer in it. And so I obviously don't trade before the macro open. We come here, we see rejection, and then on the 3-minute time frame, we see a break of structure. From here, this is already in the macro time. This was 11:51, so 1 minute into macro opening, I wanted to start scaling into the position. I'd already seen that 15-minute close, so I had my bullish bias in place. Now from here, I'm looking at where I can look for targets, and these equal highs, 3 equal highs on a 5-minute time frame is a beautiful draw on liquidity for me. Even though I knew that we'd sort of had a liquidity sweep and we were moving down, I was well aware that we could potentially do something like this, because overall my bias is still going to be bearish down to these equal lows. However, everything was just pointing to bullish movements today. And so for me, I want to start scaling in as fast as possible, because I know that this could be a retracement. We could just rip bullish straight from here. And so I started scaling in. I think I placed about 3 contracts on this position. I can't remember how much risk that was. But this is my first entry model here, is just a break of structure on the 3-minute time frame. And all that is to me is a confirmation that that 15-minute time frame, or that 15-minute bias that I'm forming from that rejection candle, is going to be a valid sort of analysis. So scaled in, and then from here, what am I looking for? Now this is where it gets tricky, because I don't want to rush onto the 1-minute time frame yet, because of the fact that we're playing it off of the 15-minute. The 15-minute and the 1-minute are not aligned. And so what I need to see from here is some sort of either a 3-minute or a 3-minute or a 5-minute retracement, something in here, and then I need to be looking for something in here to move long. That's exactly what we found. And the first one, I pre-gamed it a little bit early today. Not because of my fault or anything, but just my second entry that I took. So I'll get rid of that first one. That was the first trade. And then second entry I took was off of this SMT here. And this was an all right entry, the second one. It's ticked the boxes, but realistically this was more covering my ass in case we ripped once again. So I've placed 2 trades where it's like, I have this bias in place. I see indications that this is confirming my bias. And so I'm taking a trade based on, hey, this isn't an A+ model yet, but I want risk on the table just in case we do just move. And so for this one, for me, it was just this 1-minute SMT or 3-minute SMT, and then a 1-minute change in the state of delivery. So I only entered another 1 contract on this, and I kept stops all the way down this. Now this is very important, and this is probably the thing that I'm most proud of today, is I did not, like usually if I see a retracement and then SMT and then a confirmation to the upside, I'm placing tight stops. I would be placing something like this. Now, why did I not do this here? The reason is we have not retraced on the 5-minute or the 3-minute time frame. And so that would be me playing it off of the 1-minute. And realistically, if I'm jumping straight from the 15-minute to the 1-minute, I'm going to get cooked. So this is really freaking important, and that is why this was only a 1 contract entry as well, is because this was more covering myself, like I said, in case we ripped, rather than actually being that A+ model that I want to be like, okay, this is my big trade for the day. So that was my second model. And then this next one is where I was right here. We retrace into this 5-minute fair value gap. We didn't quite tap into equilibrium, which I would have liked. However, the model was still there. We see a higher time frame retracement with this fair value gap. We see a 1-minute SMT form between ES and NQ. And this is followed by a 1-minute break of structure. We pretty much broke structure there, but over here on ES, which is the one I was looking at, we broke structure. And this was perfect. And this was also the point at where I scaled, like I brought my stop loss from my other positions and placed them right here. Now, reason for moving stops here as well. This is my strategy, and this is because with an SMT, where it allows us to predict the base of the retracement. Whereas if I'm just playing it off of a regular thing without, free game here. This is something that I've been working on. If we see this second entry, for example, we cannot place stops tight because we don't know if that's going to be the bottom of the retracement, because it's not a retracement, and that is the reason for that one. However, with something like, what's an example? Without an SMT, say ES and NQ both took this low, we had no SMT in place, we have nothing to indicate that this is the bottom of the retracement. So if that was the case, I would need to cover stops and place them more down underneath the bottom of the body of the candlestick. Whereas when we have this SMT in place, we know that this is now an opening confluence in itself on a lower time frame model to then respect our higher time frame model, if that makes sense. And so that's why I scaled it at this time. I put another 3 contracts on. I could have put more, because after trailing my stops on all of my positions, I was only risking $250. So slightly unfortunate. We didn't capitalize as much as I would have liked to, but regardless, it was real slow today as well, man. Just low volume after CPI, I think. But yeah, anyways, TP1 got hit. This was my break-even point at my TP1. And then I took off 4 contracts here, left 3 running up in case we came up and took this data high. However, like I said earlier, my overall bias was for shorts because of the reason that we had such good draws on liquidity to the downside. And we just got flushed, and I was well asleep by this point. This is 4 a.m. where I am. But yeah, that is my winning trade for the day. So although I only took 1 take profit, I was up $170, I believe. No trades Tuesday as well. So in terms of P&L, this week in this funded account is actually looking really good. I do want to start scaling in and start adding more risk to the table. However, last night was CPI, and it's obviously just not ideal market conditions to be trading in when we do have a CPI candlestick to worry about. But a good model presented itself. My A+ model presented itself, and yeah, man, super happy to walk out of the charts with a win, because this week is looking really freaking good. Tonight, what do we have on the agenda? I've just been going through all my journaling. Like, I did the Tuesday and the Wednesday. Literally takes me a good hour to just do 2 days of that work. But that's how you get better, man. Tonight we have PPI and unemployment, that type. So potential big candlesticks, but definitely potential good volume too. So I will be in the charts 100%, and hopefully we can keep the momentum going into the weekend, man. I'd love to get a couple bigger risk wins on the charts, because I've actually been, I've kind of decided that with funded accounts, I want to either pass them or fail them. I don't want to sit on them for months on end. Because I am profitable on these. Like, I've been profitable, but it's just like, it's never worth me paying money to recur the fee when it's like my account might be just pretty much sitting at break even. And I've had a couple of accounts that I've been sitting on for like a month. It's just, or 1 month, 2 months. It's just stupid. So it's $70, $20 per trade is like 500 on the funded. That's sort of how I'm going to think of it, is each time I risk $500, I'm just risking $20 of my own money. And that's sort of going to take the stress off. And then hopefully we can actually start getting some numbers on the board, bro, because we are trading freaking well recently. Like, in terms of the 15-minute time frame, using it to form our bias has majorly improved my trading. Helped me avoid trades on Tuesday because the 15-minute time frame just had no direction. believe that was in here somewhere. Yeah, this is the reason I did not trade on Tuesday and avoided a whole lot of losses, is because this is what these 4 candlesticks here, this is what we had the hour after market open. And on the 15-minute time frame, that's not giving me any indication of shorts. It's not giving me any indication of longs. It's just telling me pretty much that we have bad price action. And when you go down to the 5-minute time frame as well, and it looked gross there, I just knew it was time to get off the charts, and ended up saving myself a good loss there as well, because there was a couple entries that presented itself. But yeah, I don't know. I thought I'd come in here and make a little trade recap, as I have been doing recently. Hella consistent with it. But anyways, I am gonna dip. Little trade recap for your Thursday night. All the best in the charts tonight. I should hopefully be back with another trade recap tomorrow. If not, I haven't traded. And yeah, we'll be back on Friday. Like and subscribe. Join the Discord if you want to have chats about trading. We've got a few boys in there. It's actually popping at the moment. But anyways, peace and love, boys. Thanks for tuning in. Ciao.